Most contractors wait until December to think about taxes. One of my clients just set out 4 strategies in November that will save him $47,000 this year. Think it's too early to worry about taxes? That's exactly why you're overpaying. Now, I'm not a CPA, don't have those fancy letters after my name, but after running bookkeeping for hundreds of construction businesses and sitting in more year-end tax planning meetings than I can count, I've learned what actually saves money. And here's what most people miss. November is when the magic happens, not December, not January, because in December, you're buried under year-end projects, holiday obligations, and weather delays. November, you actually have time to execute strategies that require planning. Today, I'm sharing 10 strategies that my most successful clients use, including one that can literally eliminate your entire tax bill if you own real estate. But first, let me tell you why November changes everything. Right now in November, you're sitting on roughly 85% of your year's numbers. That's enough data to know if you're heading for a tax disaster or if you're in a decent shape. Reality is CPAs love clients who call in November. They actually have time to strategize with you. Call them in December, January, you're getting squeezed between holiday parties and their own year-end chaos. Call them in March, well, they're drowning in tax returns, running on espresso and probably Red Bull. Let me walk you through 10 strategies that my clients actually implement. I'm not going to spend equal time on each. Some are straightforward, others need real depth. The last one though, that's where contractors who get serious about wealth building go to work. Strategy number 1, S-Corp election. If you're clearing over $60,000 in profit and you're still a sole proprietor or regular LLC, you are leaving money on the table. I've watched contractors save $15,000 to $50,000 annually just by electing S-Corp status. Here's how it works. Instead of paying self-employment tax on all your profit, you pay yourself a reasonable salary and take the rest as distributions. Those distributions, no self-employment tax. That's 15.3% on every distribution dollar. The trick is determining reasonable salary. That's where your CPA earns their fee. The IRS watches this closely, but when done properly, the one move that can save you more than a lot of other strategies. November matters here because if you want to be an S-Corp for next year, paperwork needs to be filed by March 15th. November gives you the time to actually think this through, run the numbers, and make an informed decision instead of rushing in March when your CPA can barely breathe. Strategy number 2, strategic equipment purchase. Section 179 and bonus depreciation lets you write off the full cost of equipment in the year you buy it. That $80,000 excavator, full deduction. That $50,000 truck, same deal. But timing is critical. Buy it December 30th, you get the deduction this year. Buy it January 2nd, you wait an entire year. I've seen contractors save $25,000 just by moving a purchase up a couple days. The November advantage, you can still shop around, negotiate, maybe even order with the specs you actually want and still have it delivered by year end. One of my HVAC clients mapped out all his equipment needs for 6 months ahead last October. Realized he could accelerate $45,000 worth of purchases into a high income year instead of next year when he was planning to scale back. That's strategic planning, not desperate buying. Strategy number 3, separate tax savings account. This one's very simple, but pretty serious. Set up a separate tax account. Every time money comes in, immediately move 25 to 30% there. Don't touch it. This isn't just about having money for taxes. It's about knowing exactly what you can afford to spend on tax saving strategies. Can't tell you how many contractors get hit with huge bills because they spend their tax money on materials or payroll. If you're using profit first, November is when you verify that tax percentage is actually correct. I had a GC who'd been setting aside only 15% all year, feeling pretty good. October projections showed his actual rate was 28%. That's a painful gap. But because we caught it in November, we could adjust, bumped it to 30% for quarter 4, moved some money around, and it was covered. Strategy number 4, obsessive expense tracking. Track everything. Mileage between job site, tools, safety gear, that lunch with your sub. The average contractor I work with finds an extra $8,000 to $12,000 in deductions just by tracking properly. Strategy number 5, Augusta rule. Rent your home to your business. Here's a fun one most contractors miss. You can rent your home to your business for up to 14 days a year, completely tax-free to you personally. Your business gets the deduction and you get tax-free income. Annual planning meeting at your house? Rent it for $500 a day. Client appreciation event, another $500. I've seen contractors generate $4,000 to $6,000 in tax-free income this way. The critical point, it has to be legitimate business use and you need a lot of documentation. Your CPA can help you structure this properly so it survives scrutiny. Strategy number 6, family employment. If you have kids, put them to work legitimately. Filling out paperwork, cleaning tools, basic bookkeeping. Pay them a reasonable wage for real work. The magic, if they're under 18 and working in your sole proprietorship, no payroll taxes. Plus, you're shifting income from your high tax bracket to their low or zero bracket, and they can contribute to your Roth IRA with that earned income. Family typically saves $3,000 to $5,000 annually this way while teaching kids about work and money. Not massive, but it adds up. Now that's hitting two birds with one stone. You save money, they gain lifelong knowledge. Strategy number 7, home office deduction. A lot of people have a home office but never claim it. If you do estimates, invoicing, or project planning from home, and you probably qualify. The simplified method is $5 per square foot up to 300 square feet. That's about $1,500. Easy money. November gives you time to properly measure your space, set up documentation, maybe even reorganize to maximize the deduction, and talk to your CPA about accountable reimbursement plan. Try doing that on December 30th though, you know what I mean? Strategy number 8, retirement contributions. Retirement contributions are a double win. You save for the future and reduce current taxes. With a STEP IRA, you can contribute up to 25% of your income. Last year, it maxed out at $69,000. Think about it. If you're in 24% tax bracket, a $50,000 contribution saves you $12,000 in taxes immediately. That's like getting a 24% return before your money even gets invested. The November advantage, if you set this up now, you can spread contributions over at least 2 months instead of taking one massive cash flow hit in December. And you can always max out your Roth IRA and think about 401k. Strategy number 9, medical reimbursement plans. Here's one most contractors don't know about. If you're an S-Corp, you can set up a medical reimbursement plan that lets your business reimburse your family's medical expenses. Insurance premiums, deductibles, dental, vision all become business deductions instead of personal expenses you can't deduct. This easily saves $3,000 to $8,000 annually for a family. Strategy number 10, real estate strategies, where contractors build serious wealth. All right, this is the big one. This is where I've seen contractors save the most money. We're talking eliminating 6-figure tax bills. If you own any real estate, your shop, warehouse, office buildings, or rental properties, pay close attention. This strategy alone can be worth more than strategies 1 through 9 combined. Normally, when you buy a building, you depreciate it commercial over 39 years. So $500,000 building gives you about $12,800 per year. Not particularly useful. Cost segregation though changes everything. You hire an engineer to break that building down into components. The concrete floors might be a 15-year property, electrical system 7-year property, carpeting and fixtures 5-year property. So instead of waiting for 39 years for your deductions, you are getting massive deductions in years 1 through 7. Here's a real example. I sat in on a meeting where a contractor had a cost segregation study done on his $500,000 shop. Instead of $12,800 per year, he got $180,000 in depreciation. That's at a 30% effective rate. That's $50,000 saved immediately. And here's what makes November perfect for this. Cost seg studies take 4 to 8 weeks. You've got time to review it, implement it properly, and maximize the benefit. Short-term versus long-term rentals. The tax treatment difference. A lot of contractors are getting into rental properties. The tax treatment is completely different depending on how you rent them. Long-term rentals, annual leases to families, those are passive income. Your depreciation and losses are limited to passive activity rules. You might not be able to use those deductions against your construction income. They just sit there waiting for passive income to offset. But short-term rentals, Airbnbs, VRBOs, anything with an average stay less than 7 days, the IRS treats those as active businesses if you are materially participating. That means those losses can offset your construction income. Let me paint a picture. You've got a cabin you rent on Airbnb. You do a cost seg study, create $80,000 in the first year depreciation. If it's a true short-term rental where you're involved, that $80,000 loss can offset your $300,000 construction income. That's $24,000 in tax savings right there. Same cabin rented long-term to a family, that $80,000 loss just sits in your passive activity bucket, waiting for passive income, completely different outcome. But here's where it gets really interesting. If you can qualify as a real estate professional, all your rental property losses become active instead of passive. This is massive. The requirements are very strict though. You need to spend more than 750 hours per year in real estate activities, and more than half your working time has to be in real estate. For most active contractors running a construction business, that's nearly impossible to achieve achieve yourself. This is where the strategy I see works repeatedly though. The spouse becomes the real estate professional. If your spouse can dedicate 750 plus hours to managing your real estate portfolio, I mean really managing it, not just collecting rent checks, they can qualify, and then all of your rental losses become active. I've seen contractors, couples where the husband runs the construction business, making 300 grand, and the wife manages their rental portfolio. Between cost segregation studies creating huge paper losses and real estate professional status making those losses active, they are eliminating their entire tax bill on construction income. I'm talking contractors with 2 to 3 million in construction income paying zero taxes because their real estate depreciation offsets everything. But you have to actually participate in each property. There are 7 tests for material participation, and you need to meet one of them for each property. Documentation is everything though. The IRS audits real estate professional claims pretty heavily. I'm talking, they scrutinize this stuff. You need bulletproof documentation. Time logs showing hours spent on each property. Detailed records of activities showing units, managing contractors, handling maintenance, reviewing financials, photos of work performed. Your CPA needs to help you set up proper record keeping from day one. This is why November matters. Getting this documentation system in place takes time. Start now. You've got 2 solid months of record and go backwards. Cost segregation studies aren't cheap though. They typically run from $1,000 to $15,000 depending on the property size and complexity, but I've never seen one that didn't pay for itself 10 to 20 times over in the first year alone. Think about it, $10,000 study that creates $150,000 in accelerated deductions. That's about 45 grand tax saving at 30%, and that's just 1 year. You'll continue getting benefits for years. Do not try to DIY this. I've seen contractors get creative with real estate professional claims and get absolutely hammered in audits. You need a CPA who specializes in real estate taxation. You need a qualified cost segregation engineer to do the studies. This isn't the area to cheat out, but done properly, this is how contractors build generational wealth. This is the difference between paying $100,000 in taxes and paying zero. This is why successful contractors own real estate. So ask your CPA about cost segregation for any properties you own. Ask about real estate professional status. If you have rentals and a spouse who can commit the time, and if your CPA doesn't specialize in real estate, find the one who does for this specific strategy. So your action plan, run your tax projections, do that math I showed you earlier, call your CPA when they actually have time to talk, list all potential equipment purchases, show your mileage log, review your tax savings account percentage. If you own real estate, schedule the cost seg consultation, execute major purchases, equipment, vehicles, set up retirement accounts if you don't have them, adjust tax savings percentage based on projections, prepay strategic expenses where it makes sense, get bookkeeping caught up, not in December when everyone needs their bookkeeper, and celebrate because you're not scrambling like everyone else. I know what you're thinking, November's busy, I've got jobs to finish before winter, I don't have time for this. You don't have time not to do this. We're not talking about saving $500. We're talking 5 figures for most contractors, 6 figures if you get serious about real estate strategies. Here's my challenge. This week, not next week, this week, you do one thing. Run that tax projection, call your CPA. The contractors building wealth take action in November. The ones just paying bills, wait until March. Drop a comment below and tell me what move you're going to make. I read every comment and it fires me up seeing contractors take control of their finances. And if you're thinking, well, I need someone to help me figure this all out, that's literally what we do every day. Book a call, link in the description. I can assist you with finding the right CPA. Now go make some moves. Future you will thank you when you're not scrambling in March like everyone else.